Well, hi everyone, and welcome to the Buffett and Beyond Research Saturday ETF report. And the question of the day, is this correction almost over finally? Maybe March 22nd, 2025. And when you look at these charts in here, you're going to say, yeah, I think it is. Anyway, if you want to live on this beach like Jimmy Buffett once did, you've got to learn how to invest even better than Warren Buffett does now. So let's look at the Dow Jones Industrial Average, and here's this big decline that we've been having. Looks pretty ugly, doesn't it? Then we had a bounce up, and now it looks like it wants to go down, maybe test the lows in here someplace. But look at these vertical lines here. These lines are getting lighter. These are lines of volume, and they're getting lighter and lighter and lighter. So the panic selling seems to be over. Now up here we have the stochastic indicator, and it has already turned up. Now what is a stochastic indicator? Well, let's zoom in down here and see these black lines. This is when the market closes up on the day. Red lines are when the market closes down on the day. But let's concentrate on these black lines, and you can see in here this little horizontal line to the right is where the market closed. Down here, the horizontal line to the left is where the market opened. So where it closed is measured by the stochastic indicator up at the top there. So if the market closes near or above the midway point, the mid-travel of that particular day, see this whole vertical line is called the travel of the day. If it closed near the top, that turns that indicator up. If it closes near the top or above the top half, yeah. Above the top half, yeah. So that's what turns this indicator up in this direction. Now all the way down here, this is a trend following, or two trend following lines. The black line is faster than the red line, and usually when it turns up, that's when we get a buy signal. When it turns down, like over here, that's a sell signal. So it looked like it wanted to turn up the other day. This was on Thursday, and it just couldn't make it. So it's boy, you can't get any closer than that. All right, let's go to the S&P 500. We see the exact same story, don't we? You could have guessed that, hey, it's the same chart. And look in here, over here, about this bottom indicator once again, you can see as it crosses down, that's when you get your correction, and now it seems to be easing up, and we're waiting for that cross up over this line. That will give us this buy indicator down here. So this is a histogram of these two lines down here. Works pretty well, except when you're waiting for it to turn. That could be just disheartening at sometimes, but we'll look at the portfolios in a second. All right, when we look at the QQQs, which is the NASDAQ 100, let's go back up here. This is a different indicator now. This is the relative strength indicator, and boy, it looked like it wanted to turn up. It did turn up, and then we got a down day and then an up day, and now two down days as I'm recording this on Friday afternoon. So this is a little top in here. That's what's giving it away that maybe this wants to go down and test this low down here, which is only 10 points away on the QQQs, which is 400 points on the NASDAQ itself. So we'll see what happens. We're not afraid of 10 points in here. And it would give a good test of this bottom. That would make all the traders happy. And if we could test this and then bounce off to the upside, everybody would be happy, and we would be in for some serious rally especially on the QQQs, because that's where most of the tech and semiconductor stocks reside. And let's look at last week's returns. This is our Sector All-Stars model portfolio, and these are stocks from the top stocks from some of the top ETFs that have outperformed the S&P 500 over the past 5 years. So last week, The QQQs were down 6.4%. Again, the QQQs represent the NASDAQ 100. These stocks went down 6.4% as of last week, and now they're down about 6.8%. So a 0.4% drop in the QQQs. The S&P 500 stayed the same. Now, what about our stocks? Well, they're down 0.1% more than they were last week. So that's hardly a move at all. Let's go to our NASDAQ 100 top stocks, about a dozen stocks. And again, we can see that the QQQs dropped 0.4%, S&P stayed the same, and our top stocks stayed the same. So this is pretty neat in here because don't forget, the QQQs went down, and these stocks come from the QQQs, and they didn't drop even 0.4 like the QQQs did. And remember, last year this portfolio was up 47.2%, the year before up 97%, and over 5 years it's up 422%. Not this exact same portfolio because there were a few different stocks in it, but over 5 years up 422%, and the S&P up 82% over 5 years. So this portfolio has increased 5 times more than the S&P 500 over the past 5 years. That's not too bad, folks. So we'll take a little loss of about 8%, while the index itself is down 6.8%. But boy, on the upside, it really moves faster than the QQQs do, which is what it's intended to do. These are the top stocks in this portfolio over the NASDAQ 100 stocks. And we have a couple of positive stocks in here. Yeah, very nice. And look in here, this is Trade Desk, and we thought Trade Desk would be much better or do much better, but it's in advertising. And so in advertising, as the market looks for a slowdown in the economy, then the advertising stocks do get hit. And it is down 52%. If this stock was not in this portfolio, we might be even for the year. So, but that's what happens. Sometimes you get a good stock like Nvidia last year, up almost 200%, and this year it's down. And so you get your down stocks every now and then. But as the economy comes back and people gain more confidence, then advertising will definitely shoot back up again. This has been a good stock over the past 5 years. We should have shown that in this portfolio this week. We'll show it, or not in portfolio, but in the charts this week. Maybe next week we'll do that. Good idea. Okay, and let's look at oil and gas. Oil and gas was on a roll here, went up, and now it's starting to turn down. Short-term indicator up here has turned down. So those of you who were long might want to, the oil and gas ran right into this 50-day moving average here and then got rejected. But the 20-day moving average here is turning up. So that might be a good sign. Indicator down here still pointing up. So we'll see how far this little decline lasts. And remember, up here, short-term indicator, very short-term. And let's look at gold, because we looked at gold last week. Nice little rally in here. And then its short-term indicator is turning down. But come down here and look at these two red lines. That's the volume on a down day, much, much lighter than the volume on the up days as this rally was taking place. But still, we have to be a little bit careful in here. Reason being is because this market, or this this gold ETF, made a higher high. But if this line turns down here, then this is making a lower high, and that could be a sell signal. We do have a short-term sell signal up here, so we have to be very, very careful here. And let's look at the gold miners. We talked about it in our letter this week, and the gold miners look exactly like gold, doesn't it? Yeah, lighter volume on the downside for sure, and maybe this indicator is turning down. We've got to be very, very careful of that. So if you're in the gold index, it might be a good time to either cover this position. If you're trading, yeah, take the money and run, and then just see what happens. Because of this, again, making a lower high while this index made a higher high. Again, this is the gold miners. So, folks, we had a week where maybe the decline is close to being over, and then we'll be in for a rally. And one of the technicians was showing the cyclical movements of money flowing into the market, and it usually ends the end of March, which is next week. And then money flows in April, and we usually have a good April. So maybe this bottom that we're seeing now is an indication of a true bottom, and then we'll start rallying possibly toward the end of next week. At least that's what we're hoping. That's what we're looking at. So, folks, let's go with it. Take the weekend off. Keep your mind off the market. Be safe. Be with your family. And, folks, we'll see you right back here in a couple of days.